What's going on, everyone? My name is Nicholas Merton here at Data Dash, and today is August 8th of 2019. Well, folks, I hope you are having a fantastic day wherever you are, and I'm so happy you can be joining me today because we're going to be talking about a topic that's not only extremely important, but what may be one of the largest problems in the financial sector. And the crazy thing is, you probably haven't heard much about it or heard about it to this extent, and that is a mixture of large currency crises. Now, if you guys are active viewers of the channel, you probably know that we've been talking about the currency crises that we've seen in 2017 and 2018 from Venezuela and Argentina and South America all the way to countries in other regions of the world such as Iran and Turkey. And even though this seemed like an isolated event for a short period of time, this was an early warning sign of something much bigger to come in my mind. And we're going to be talking about that in this video today because I'm not the only one who thinks this as well. So we've got lots to talk about, guys. I hope you'll stick around, and we've got a lot coming up right after our quick sponsor. Alrighty, everyone, so let's go ahead and do a real quick cryptocurrency market recap and get to the main point of the video. As we can see here, most cryptocurrencies are in the red at the moment, slightly pushing out of the no trend scenario for most cryptocurrencies being down. If we take a look here at global markets, Bitcoin dominance again continuing to rally upward. Again, I think we're going up to 70%. Some indicators have already read it at 70%. Really depends if you factor in stable coins. But we can see here, market cap is rising up here. Altcoins are stagnating at the moment. So again, it's going to get tighter and tighter, guys, on this, no matter if we get an altcoin cycle soon or not. So you have to have those ones that have been winners in this market. Now, if we take a look here, as we talked about yesterday on the TA side of things for Bitcoin, we talked about how as much as this could have been a point of resistance to push us down here, it looks like we're pushing through. This is what I was thinking we'd likely get, is that there's so much momentum in this market, guys. The volume really has yet to have a breakout just yet. I think if we get that breakout and stuff and we get to a price range around 12,500, like similar to what we saw back in the highs around here the other day, if we close above those highs, we're going to easily be confirming that we're out of the correction territory. Again, I want Bitcoin to stay low, and we're going to be talking about why I'd love Bitcoin to stay low, because I want to add in as much as I can. And it has to do a lot with one of these concerns, not to mention there's a dozen other things that we've talked about on the channel. I mean, we've heard about the trade war, we've heard about Fed monetary policy, we've heard about concerns in Hong Kong and, global economic slowdown and the general economy, the housing market, assets, whatever it may be. We've got a lot of things that we've got on our mind, guys, as contrarians. But there is one that a lot of people don't spend time studying because it's not as visual or prevalent as the stock market. It's not as visual or prevalent as the housing market. And that is currency markets, Forex markets. And Raoul Pal, this is an individual who runs a company called Real Vision. And I'm not shilling the company, guys, but I will tell you, if you aren't subscribed to Real Vision or if you haven't checked out a lot of their free material, check it out. If you guys like my macro rants, go listen to some other people who are much more talented and much more knowledgeable in the financial sector talking on these issues, because there's some people who are in the thick of it who Raoul Pal interviews through Real Vision, and they're some of the brightest minds. I'd say Raoul Pal has probably one of the best summaries of what's going on in the financial sector than most people in the world. Like, he is, I think, top tier because of the interviews and the insights that he's been able to gain. So anyways, putting that aside, he's a really cool guy, and he actually uses the Twitter thread feature really well. And he went on almost kind of like a Twitter rant talking about the worries and concerns that he has about currency markets. He believes right now that we are in one of the most exciting and most important times of his 30-year career in Forex markets. I think that's a really good way to just kind of signify the significance of this. And I honestly appreciate Raoul Pal putting this out because I was concerned I was the only one looking at Forex markets and seeing this kind of currency divergence between a lot of different currency pairs. But Raoul Pal, like me, he's kind of a naked trader. He looks for support and resistance. Don't worry, he's not naked when he actually trades. But he actually has a lot of interesting, significant things that he brings up in this. So we're going to go through each of these charts and kind of break down what his point is and why these are significant. All right, so let's go ahead and start from the top. A currency crisis. When the long-term charts all start pointing to a single event risk, I pay attention. When those charts are at the key level, I focus. And when they break, it's time for action. Something really big is going on. It's just kind of a precursor here. We are in one of the most important junctures in FX markets in my entire 30-year career. The dollar appears at risk of an uncontrolled rise. Let me show you. So I know this is very actually contrarian to the contrarian viewpoint that a lot of people have. A lot of people, believe that, the dollar is going to collapse and this and that. But I will tell you all, from my analysis on this, I have no doubt the dollar, just like other fiat currencies in my mindset, will collapse. But it is going to be the last one through the door because the dollar is still the world reserve currency. It is still one of the most powerful currencies across the world as a denomination for spending, between goods and services and paying for goods and services. So again, very important to take that into mind. Not to mention U.S. markets are the strongest in the global economy right now in the sense of equity markets. That's very important to factor in. All right. So the Fed broad trade weighted dollar index is incredibly close to breaking the enormous cup and handle pattern at 130, barely 0.5% away. Now, if you guys have been generally following, for example, the Dixie, the DXY, the dollar index, you'd probably see that we are definitely pressing up high in the sense of the value of the dollar. But this is another weighted dollar index that people use in order to evaluate the dollar comparative to other currencies. And we can see here that there has been what's known as a cup and handle formation, where you have a slope in price, a handle, right? So this is the cup and the handle, and then you have a breakout. So we're very close to this. Now, why is it that we're close to having this breakout? There's a lot of fundamental reasons for this. I would say the biggest problem right now is over the last few years, there has been a squeeze on global dollar liquidity in this case. And a lot of countries have taken debt out in dollar denominated debt. So this is exactly what happened in Turkey. What Turkey did is that over the last few years, they went on a spending binge. They borrowed a lot of money from the United States that was denominated in US dollars. So to give you perspective, if the Turkish lira loses, that's the currency of Turkey, by the way, if it lost half of its value, and let's say Turkey owed $200 billion in US dollar denominated debt, the dollar denominated debt stays the same in dollar values, but the Turkish lira has lost half of its value. So that means you're going to need to get twice as much currency, pretty much the equivalent of $400 billion of what the Turkish lira used to be worth, in the sense to pay down for that debt. You have to work twice as hard. And you fill yourself into a hole. And the only way you can get out of it is printing the crap out of your currency, trying to pay down your dollar obligations. But we all know with more currency creation comes more debt. So it's like something you can't really get out of. Now, as we go through here, as we go through some of his points, let's continue to read the story. And this translates into the largest chart pattern in the history of Forex. The ADXY head and shoulders top, a pattern so big I can't quite get my head around the outcome, a fall of 20% or more across all Asia major currencies, and we are right on the cliff of death. Now the ADXY in this case, as he mentioned, is a measurement of different currencies throughout Asia. You have a variety of different currencies. Thailand has its own currency, China has the Chinese yuan, the Japanese yen for Japan. You've got all kinds of currencies to consider, as well as the peso in the Philippines, all kinds of areas across the world. Now, if we take this into mind as a broad index, we can see here that if we're considering what most people really consider as the best indicator, which is clear historical long-term support, we can see that we have breached this line of support since back in 2004. This is extremely significant. We are already not only down since the early 2010s, but along with that, we are looking to break down and have a serious flush on Asian currencies. And we've seen this historically. We've seen this. This was the previous currency crisis, I think it was back during the 70s and 80s, that happened in Asian markets. And it was huge on the global economy. It had a weight on everyone. And we can see here as well, the key juncture on the JP Morgan Emerging Market Currency Index. So this is, again, taking a lot of emerging markets, a lot of them in Asia, Southeast Asia, different areas of the world like South America. And take a look at this here, guys. No sign of recovery. The same exact pattern of a rising line of support and then a breakthrough. And this is what we've seen time and time again. It does not look like we are seeing any serious improvement in this. And one currency after another is approaching and then falling off the cliff of death. The Aussie broke a while ago and has been tumbling ever since. Now, if you guys know, the Australian dollar actually used to hold a decent amount of strength in this case. It was gaining as a currency here comparative to the US dollar, all kinds of currencies. Well, it's been breaking key support lines that have, again, were taking into levels all the way back to 2008. So this is seriously significant stuff. To kind of signify what this means, you guys might be wondering, how do you measure the value of a currency in this case? Well, there's kind of two ways. You have indexes, for example, that weight it against a variety of different currencies, or you have it in a specific pair like the AUD, USD pair, which is the Australian dollar to the US dollar. And that's basically saying, how much dollars can I buy with an Australian dollar? It used to be you could buy more than a US dollar in this case. And then after time, it's devalued, and it's now gone down to where a US dollar, you can only purchase a fraction of a US dollar, about half, a little over half of a US dollar with an Australian dollar. So it showed that the US dollar has gained a lot of strength, and it's not just in Australia, guys. It's a lot of places. Also as well, our Kiwis over in New Zealand, a country I would love to visit. Again, another currency that over the longer term, to be fair, has made a general uptrend over the last few decades, but looks like it could break that key support it has been holding on to those two key times in the past. If we start to get breaks on these currencies, guys, and they happen in sync, there's something not only fundamental that is fueling this, but it is going to come in hard. This is how currency crises form. They come through a formation of multiple currencies coming through similar patterns of weakness, and then you have big swings. This one here is really interesting. This is the Korean won in this case. This is the currency of Korea. And now, again, we have to consider what this currency pair is, okay? So this is how much the dollar will be able to buy of the Korean won in this case, right? So take a look at this pair here, this kind of zigzag wedge over a matter of more than 2 decades of price action. And now we're getting to a juncture here where if this resistance is broke from these two lines, if we break outside of this wedge and say go to 1300 for the ratio of this pair, I mean, we are going to have a serious problem on our hands for, Asian markets in this case. I think this could be one of the big dominoes here for the Korean markets. And it's absolutely incredible to have a technical formation like this. This is prevalent to any trader who's got, who's worth their salt and is trading serious money. They're going to be looking for these kind of patterns. So again, guys, as well, Canadian dollar, we've had a breakout here of the US CAD pair here. So this means, again, that the Canadian dollar is losing purchasing power. To go down here as well, the pound. Pound has been one of the currencies, I guess, as well, that to many looks like it might have some value with a potential resolution on Brexit. But I have to say, as much as I was kind of in that camp for a while, take a look at this chart, guys. We're about to pass down. If we break down and don't get a resolution in the next few months for Brexit, this could easily break down past the lows of the early 1980s. I mean, this is serious stuff. Serious stuff, guys. So the euro as well. Don't even get me started on the euro. Euro is in a disaster situation. But there's one big domino that we have to talk about because we are focusing in predominantly on Asian markets. I think this will hit a lot of currencies across the world because Europe is in the same position that Japan's in. And I think no country is prone from falling for the same mistakes that Japan has made of negative interest rates, of going through and pretty much buying up all the assets on the open market. Now, we've got to talk about something even bigger, and that is what happened in China the other day. So we talked about China's purposeful inflation and devaluation of its currency and how we hit the historic 7-point range here. This was resistance for a long period of time for the Chinese currency. We have not seen this since back in 2009. This means that with every dollar you have, you can purchase 7 Chinese yuan in this case. Now, China has been a currency manipulator for a very long time. It's just prevalent, guys. I like a lot of things about Asia and China specifically. I'm not talking about the country, but in the case of China, they're setting themselves up to really spawn this currency crisis. And that is going to be from us now breaking this line of resistance, the only level of significant resistance technically until the previous highs here for the Chinese yuan to the dollar in this case, so the dollar to the Chinese yuan. This means that we're likely going to see this come back up to the upper 8-point or 9-point range here for the currency pair. That is going to mean percentages of decline in the purchasing power for the Chinese people. Now, what does that mean? Why is that significant? Well, that's going to mean that people are going to obviously see that this trend is forming, so they're going to want to go to stronger fiat currencies. No doubt the dollar, this could fuel a lot of the fire for the dollar. But what it's really going to do is it's going to spawn support for cryptocurrencies. And Raul talks about this in his article. He talks about, for example, I mean, if we talk about, the commodity market, we talk about what's going on in the financial sector. He continues to talk about how gold has been outpacing this market. He talks about Bitcoin as well, talking about, and again, taking a very simple perspective into this, the line of support here from the lows, and seeing how we've been able to have this monstrous rally over this last year. This explains it, guys. This explains a lot of what's going on. We usually don't see recoveries this quick in crypto, especially of this. We haven't seen it of this significance in the sense of the valuation that Bitcoin's trading at. But this all has to do with the fact that we're getting into an environment where even, for example, U.S. treasuries look like they're on a course in the next few years, if they continue with this trend that we've been on, sometime in 2020, to go down towards negative rates. The U.S. is not prone from this, guys. Again, I'm not trying to sell this as a U.S., U.S. Is above, other countries kind of thing. No, this is something that's going to hit every single market. It's going to hit others first who are in a weaker scenario, but it's going to hit all of us. And that's exactly why Bitcoin and gold have moved so parabolic. I think it's just finally starting to hit people that this time it is different. There is factors that are actually applying enough pressure here. I mean, you guys can look through the rest of the charts here. We have talked again about the EU banks. Raul Paul has talked about this for a while, literally on the cliff of death. I mean, to really put this in perspective, guys, you want to talk about how much currency is inflated. Equities should go up over time, and their prices should factor in inflation. We are seeing EU bank stocks at levels we haven't seen since the 1990s. Or, well, we have seen these around these time periods, but it's literally sitting at levels that it was at in 1990. Factor the inflation that's come in and just how easy it should be for banks to make money, not producing anything and just generating credit out of thin air, and they're down this low. That tells you something's broken. It should not be like this. They should be on a steady uptrend. The EU economy should be growing, but it isn't. Something is fundamentally flawed in the monetary policy, not to mention as well Japanese banks. So I've looked enough at these charts, guys. I think we got to the bottom here. And as Raul Paul kind of puts it, you get the picture. There is something very fundamentally flawed in the economy right now. And as we take a look here is another good chart I want to take into account here in the sense of, I think, one of the biggest problems outside of, well, it has to do a lot with currency markets because it's the treasury notes that are, kind of backing those currencies in a sense, the obligations of the government to pay back those debts. Well, now we're in an environment where if you're owning treasuries, now you're actually having negative yields. And the issue right here that we're going to focus on, LMTR, always putting out really good charts, they said that the present declining yields that we've seen, even despite Fed rate cuts in this case, historically indicates a big economic woes ahead. So what this chart indicates is that in this period of time where we have interest rate cuts, a significant of this, and we have these kind of significant declines in the treasury yields, this is where it's highlighted on the chart, these red bars here. And it's really in two scenarios. The 1987 flash crash, Black Monday, where stocks dropped at a crazy rate in a matter of a very short period of time, and the global financial crisis. And now we have finally hit it for the third time. Things are getting exciting, guys. I feel very, very comfortable being exposed in cryptocurrencies like I am. I don't know what your guys' risk to reward level is. You have to determine that for yourself. But this kind of stuff is really interesting. This is no longer just a sense of bias, guys. Again, I've told you guys I was long on equity markets for years. But there's enough signs right now that are starting to make me feel like we're about to flip the coin. That the contrarian viewpoint is actually going to start to win out. And it already has started winning out. You guys don't need me to tell you that. You can take a look at the prices of markets and the best performing assets of this year. Gold, silver, and Bitcoin. 3 best performing assets. Rest of commodities, because there's no growth. Stocks, treasuries, property markets, all stagnant and soon to be selling off, in my opinion. So, exciting times, guys. Love these kind of rants. Hope you guys enjoyed the video and the data we went through. If you haven't, follow Raul Paul on Twitter. He's a really nice guy. I know he went on, for example, Alex Sanders from Nuggets News, one of my good friends in Australia, another crypto YouTuber, had him onto the channel. Was an extremely insightful interview. I'd love to talk to Raul someday, but if you haven't, guys, follow him on Twitter. Follow me on Twitter as well, if you guys would like. You can find it through my channel if you go to the channel page. But until the next video, guys, thank you all so much for watching. It's very exciting times. I hope you guys are staying tuned, doing your research, and preparing for these big shifts. And until the next video, I will see you all in the next one. Stay tuned.